In this video, I'm going to give you a quick introduction on how to consistently make money in the stock market. So what a lot of people do is they think that they have to buy low and sell high. So we're going to use Facebook as an example. They think that they can buy Facebook at, let's say, 195. And then they're just going to guess, and then maybe they'll sell it at 230. They have no idea what price to sell it at. And if Facebook goes down to 180, then they're probably psychologically going to just keep it and hope that it goes up. The probability that you're going to make money by buying Facebook, and I know it's trading right now at around $210 at, let's say 210 and then sell it at a higher price, is probably around 52%. And on average, you're probably going to earn around 7% a year before taxes. What a lot of other people try to do when they get more aggressive, because they listen to all of these fake gurus who tell them that they can turn $10,000 into like 10 million, is they day trade. And they think that they are able to predict the price action by listening or by identifying like 3 charts. That is so funny to me, because as someone who graduated from one of the best schools in the world and worked as an investment banker for 5 or 6 years and has 20 years of experience, it's funny how marketers can prey on innocent people and use fake social proof and fake reviews and create entire fake websites in order to convince people that they should day trade. Because when you day trade, not only are you not going to turn $10,000 into 10 million, but you're not even gonna make money. You're gonna lose all your money. But what a lot of these people do is they think that they can take a random chart and that they're gonna be able to sell right here, buy right here, sell right here, buy right here. There's no way possible that you're going to do that. But obviously a lot of you guys don't believe me. Everyone thinks that they're special, and you guys think that you're going to be able to call the highs and the lows of the market and that you're going to be able to turn 10,000 into 10 million. If you're able to do that, please send me your full trading statement from a legitimate broker and send me a screen recording that shows your entire transaction history. Okay? Right now, I'm going to show you how to really make money in the stock market. So the way that we make money in the stock market is by selling insurance. Let's say Facebook is trading at $210 a share. I can receive money for agreeing to buy Facebook at 190. Okay? So what this is this is called a strike price. And by agreeing to buy Facebook at $190 a share, I can get paid around $1 per share. And I can sell one contract. One contract is equal to 100 shares. So when I agree to buy Facebook at $190 a share, even though it's currently trading at $210, I can collect $100, because $1 a share and one contract is 100 shares. Now the other thing that this has, it has an expiration date. So remember, the way to consistently make money in the stock market is by collecting premium and by selling insurance. So let's say I decide to agree to buy Facebook at a price of 190, and I agree that I'm on the hook to buy Facebook at 190 for 3 weeks. This contract for 3 weeks of being forced to buy Facebook if it falls to 190 from its current price of 210 will pay me, let's say, $1 a share. If I agree to be on the hook to buy Facebook at 190 instead of 3 weeks for 6 weeks, then maybe I get paid $2.20 a share. As a result, If I get paid $2.20 per share for every contract that I sell, I collect $220. So in this example, if Facebook falls down to 190, my net break-even cost for this 6-week put option is actually going to be $187.80, which is the $190 strike price less the $2.20. So what I'm doing is I'm obligating myself to buy Facebook at $190, even though it's currently trading at $210. And because I'm collecting $2.20, my net cost in the worst case scenario is that I will have to buy Facebook at a price of $187.80. Now, 95 out of 100 times, Facebook is going to stay above $190. So what happens in this situation when Facebook stays above $190 in 3 weeks or 6 weeks time? I keep my entire premium. It's just like if you buy car insurance for a 6-month policy and you don't have any accidents, you then pay again to your insurance company so that you're insured for another 6 months or for another year. So in this situation, we are the insurance salesman and we collect money from the person who buys our put option, and after 6 months, just like with the car insurance, if there are no accidents, we get paid again. If you decide to insure your car for a year and you don't have any accidents, then you pay us again and we collect that insurance. But this is even better than selling car insurance, because in this situation, we collect and keep the entire premium 95% of the time. When you sell car insurance, there's probably a claim on every 6 or 7, no, there's probably a claim on around 3 or 4 of the claims every single year. So they probably keep the full insurance around 65% of the time, and 35% of the time they have to pay out money because there's been an accident. So this is how professionals make money in the stock market. Pretty much professionals make money in the stock market in 2 ways, and really only 2 ways. The first is they're a market maker. So you have like Goldman Sachs, they buy large chunks and large quantities of shares directly from the exchanges, and then they profit like 0.5 or half of 1%, 50 basis points for making markets. They don't take directional risk, or they don't have a directional bias. Instead, what they do is they're just a broker. They profit from the bid-ask spread differential. That's the first way that professionals make money. The second way that professionals make money is they sell option premium. That's pretty much it, right? Like, that's it. Those are the only 2 things that give you a statistical advantage in how to consistently make money in the stock market. So I'm going to create more videos like this and explanations and tutorials, and if you have any questions, you can go to BestStockStrategy.com and sign up and receive $400 in free training. I also provide trade alerts to all of my subscribers. Every single one of my subscribers makes money. This isn't a get-rich-quick scheme where you're going to turn $10,000 into $10 million, because all of those guys who tell you that they do that are all frauds. Make sure that before you follow fake gurus that you always ask for full trading statements and screen recordings of their entire transaction history. And remember that the only way to make money in the stock market for retail traders is to sell option premium, and you should always think long term so that you can hit singles. You're not going to get rich overnight, but if you consistently work on yourself, put out content, work hard, and hit singles and profit consistently, then it doesn't matter if you're making $10,000 or $15,000 in 1 year, because 5 years from now you can turn that $10,000 or $15,000 into $200,000 or $500,000. So don't judge yourself too harshly by where you are right now. Do not give into the mentality or the pressure that you have to make quick money, because real wealth is built by sacrifice, so you can pay the price today so that way you can pay any price in the future. Once again, this is David Jaffe with BestStockStrategy.com, and if you have any questions, let me know and I'm here to help. Thank you.